Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Dennis Dick. Again, Joel will be back with us on Monday. Well, today is going to be a very interesting and important day, I think. Today is the first real test of this rally we've had dating back to early November, mid-November. The first real test to that coming today. Turbulence in Iraq. We'll talk about that and the reactions. There are a lot of them across the market here. S&P futures are down 1%. Gold is up as you'd expect. Oil is up. Bitcoin up 6% this morning. Lots of stocks volatile off of these headlines. The defensive names, we know that. The airliners, so a lot to get to on our show. There is some other news, but this turbulence in the Middle East and in Iraq is going to be the dominant theme of the day here. We will be joined at 8:35 by our guest, Chris Temple, who's editor and publisher of The National Investor. But again, like I mentioned, the theme of the day is reactions to the overnight news about a U.S. bombing in Iraq. So let's bring Dennis on. Dennis, good morning. I imagine it was a volatile after-hours session for you.
You know what? It wasn't. It was funny. It was very quiet because most of this happened after 8 o'clock when SPY is closed. So the futures, if you're a futures trader like Mr. Jeremy Newsom out there, if you're listening, Jeremy, good job last night. I know he was taking a short on this news, but I shut her down at 8 o'clock, and the futures were absolutely doing nothing. I heard about some bombings right before the 8 o'clock close was coming through, that there was some bombings, but you think bombings over in the Middle East isn't nothing uncommon. But then, you start getting more details coming in, the futures start tanking, you realize, okay, well, now we're into something serious because somebody big was killed. So give us, just the timeline on what's happened and transpired here in the last week to make the U.S. go into these airstrikes.
So exactly, everything is a reaction to something else. But this most recent string of events dates back really to over the weekend when the U.S. There was a U.S. bombing over the weekend that killed 24 members of an Iranian-backed militia. As a result of that, protesters stormed the U.S. Embassy compound in Baghdad on Tuesday, and as a result of that, last night we got an airstrike in Iraq, that killed Major General Qasem Soleimani. He was the leader of the Islamic Revolutionary Guard Corps. He was a big fish, and so you don't often get people of his caliber killed in these bombings. And so that's the big news today, that we got Qasem Soleimani, and now all of a sudden tensions are escalating in a matter of days. We've gone from I guess relatively quiet geopolitical landscape to all of a sudden the U.S. is encouraging any Americans in Iraq to get out of the country.
Dougie Cass always says risk happens fast, and that's exactly what we have saw here overnight. With that being said, let's put the sell-off into perspective. We are simply giving back yesterday's gains. I mean, we are now trading just to where we were back on the 31st. So we had a really good first day of the year, and we're giving it back here this morning. The question is, like you were saying, it's a huge test. Do they come in and buy this dip? They already are this morning because we are substantially off the lows in the futures. We're also substantially off the lows in some of your market leaders like Apple. Apple's already rallied almost 3 points from the lows. So you are seeing them already come in and buy the dip. Does that continue? What happens when the real money comes in at 9:30? Is there some nervous Nellies out there? Are we going to war? There's a lot of questions to be answered, but we know this market likes to climb a wall of worry. So I'm not just going to jump in and start liquidating my portfolio because, there's potential that we could be going to war here, because every time I've liquidated or anytime I've reduced my exposure to the markets, it's been a mistake.
Right.
So, as a trader, you got to be able to go both ways. And like in my trading account, I talk about a lot. I try to stay hedged. I try to stay hedged overall, and and to eliminate the risk of an event like this or the overall market risk. In my long-term portfolio, I stay long. So here's the question, and we can just go again here is, are we going to war is the big question. And that's what the market is kind of worried about here this morning, and you can clearly see it not only in the stocks, but in the stocks that are trading higher and the stocks that are trading lower. So for instance, all of your defense stocks, and think there's the big four: Lockheed Martin, LMT, Raytheon, RTN, NOC, Northrop Grumman, and General Dynamics, which is GD. All of those stocks are trading substantially higher here this morning, up 1-2%. So, and those are your war stocks, your classic war stocks.
Yep, and it just in line with that same theme, oil.
Oil
Any
stocks.
defensive name will be up today. Oil, gold. Well, I guess that's pretty much it.
Oil always goes up in
Yeah.
war times. So do those defensive stocks. So right away, and then we've been a while since we've talked about wartime, so you got to go back a little while. But I can remember I've traded through this before. We've traded through different war times before, different worries of war, and you automatically think oil strong. You automatically think those war stocks like Lockheed Martin, RTN, NOC, General Dynamics I just talked. Boeing is sometimes thrown in there, but Boeing's got its own thing going on, and so it's not responding as well as it might normally. And then you think defensive. You think gold, silver usually catches a bid. We have Bitcoin now, so that's catching a bid, like you were saying here this morning. But really, when you jump and you look at what the movers are here this morning, it's a rotation out of the leaders and into the defense. TLT trading substantially higher, which is obviously bad for your banks. So your banks are showing some relative weakness here this morning as well. And because oil is so high, think about all your relationships. You got to go back to your relationships 101. And when oil is trading higher, your airlines usually are substantially lower. And if you look this morning, all of your airlines like Delta, UAL are all down around 2%, so about double the market. And that's because they're sensitive to the price of oil.
So the question now, Dennis, is I guess you already asked it, but what happens when the real money comes in at 9:30?
Yep.
And how I guess will they buy this dip? And you were saying on the pre-market show we're already off those lows, right? So
We are.
To an extent, we have already bought the dip.
We'll bring up the S&P futures and we'll just see, or other if you want.
I've got SPY. I'm like you.
SPY's fine too because we can see it. Yeah, and you can see, we were down under 319. We're 20 handles, so you can just take, quickly if you want to do the math, 10 points on SPY or 10 points on the futures is a point on your SPY. So you can just relatively say we're almost 20 handles off the lows here on the overnight lows. So we've already got back a third of the losses, and we're working on trying to get back more here. So actually, I think we probably even got more than that back. So it's a substantial bounce here already. Apple, bring up the Apple chart because this one has been a market leader, and this is something they look at. And yes, there is some analyst commentary here on Apple, probably helping it here this morning, but I don't know if that's right who sold it at 285 this morning. If somebody did that, give your head a shake. But I do see that it looked like it ticked down to 285 right at the 4 o'clock open. I don't know if that was just a bad print, but if we strike that trade, you can see it was trading the 294 handle. We're already back in the 298 handle. So Apple's got 2/3 of its losses already back. So these money managers are coming in here already this morning and already buying the dip. So does that continue after 9:30? That's still to be determined, but this has been a hard market to battle from the short side. The shorts have had a rough time with it. Every time we get a little bit of a dip, the money managers has come right back in buying stocks. I don't know if it's different this time. Sometime it will be different, but I'm not betting that this is the time. So on pullbacks here, I guess you still keep looking if you're underinvested. Maybe you're looking at opportunities to get in some of these stocks, but they're already jumping at Apple. Unbelievable how resilient that stock is.
And the events of last night, it's funny because so they're significant. It's not as if we're going to go to war tomorrow, right? We're not, but they are. So they're not significant in that way. We're not going to war like this, like tomorrow, but they're not insignificant either. So don't you think that what happens today could set the tone for really the entire year in the market's ability to just shrug off any sort of macro risk, be it geopolitical, be it economic, whatever. I mean, what you just said is true. We've seen this over and over and over again. Just buy the dip, buy the dip, buy the dip. Don't you think that if at 9:45 and at 10 a.m. this morning, we're back up to where we were yesterday, and the overnight dip is gone, then that sets the tone for the year?
Yeah, like I mean, if you can't keep the market down, on the worries of war, what's going to keep the market down? So does this, continue though? Like, so this headline, if nothing comes of it, but you even said there was word this morning here that there's going to be, there's that they're not just going to sit back.
No.
So what was said this morning? You said to me right on the pre-market show that there's already, coming from the Middle East, threats against the U.S.
Yeah, as you would expect, people from Iraq and Iran are releasing statements saying that there's going to be revenge, and they call it a breach of sovereignty, and so it's not. This
isn't going to just go away overnight.
No.
So maybe the market shrugs it off, and maybe we get all back. But worry is not going to go away. And think about the trade war. How many times? Okay, we think the trade war. Okay, we're getting assault, and then boom, it's back us. This could stick around for a while. I mean, if there's a reaction, or if there is a revenge tactic taken here, that can knock the market down too. So you do have to be cautious. If you're fully invested and you're on margin, maybe it's the time to think about lightening up. But again, as an investor, as a long-term investor in the market, if you're looking at your retirement accounts, I don't even shrug at this. I just, hold on, because every time I've been nervous about the markets before, like I said, and I've sold stocks out of my retirement account, it has been a big mistake. We're at all-time highs, so it's obviously been a big mistake for everyone who's taken money out. So I'm going to hold the long-term stuff through this, but in the trading portfolio, I'll be a little cautious with the longs, but again, cautious with the shorts too. Am I coming in here and shorting stock when we're down 30 handles? It's been a losing trade every time for the last couple months you've done that. We had the one little sell-off there in late November, early December. 3 days later, they bought it right back. So it's hard to fight the tape. Trend is still intact. I'd say we get under that 320 SPY, it gets more interesting. So just from a technical basis, we went down there, we tested it this morning. We did bounce already there once. Let's see, can we hold that 320.15? That's the low from the 31st, which is only 1 day ago. But we know we bounced significantly off that yesterday. So can we hold that low? 320 is the first test, I would say. As long as you're above that, bulls are still in control.
Okay, what would you do with oil here? So the last time we got a big volatility event in oil was
a selling opportunity.
Was September.
Yeah.
When there was the airstrikes at the Aramco facility that knocked off half their production, apparently. You knocked it offline. And within a few days, we were back to where we had been. So the market just shrugged that one off. So that being said, what would you do with oil here up what is it up? 3%? I can't, 1%? 3%.
My opinion, I'd sell it. I think this is a rally to be sold here. Yes, you get the relief rally. Yes, if the war times continue, oil will continue to rally here. It's a big pop, though, and you made a great point there back in September. We got the ridiculous pop in the USO. It was sold off, and within 2 weeks, it gave it all back. I think oil is just in a long-term downtrend. I do not see oil going back to $120, $150 a barrel as we got back to in like 2007. There is a move here, and you've got to consider the ramifications of electrification of cars. This is long-term. I'm just not. I have very little oil exposure in my long-term portfolio because I'm not a believer that we are going to be, using, as much gasoline in 10 years as we use today. And obviously, oil is used for a lot of other things, but it's a dirty fuel. And if you believe in global warming, there is going to be continued move away from dirty fossil fuels. And oil is one of the dirtiest, if not the dirtiest. So I think just as a long-term investor, I think every rally in oil, in my opinion, is to be sold. That's just my opinion, my thoughts. I have very little oil exposure. I do believe, I'm not saying I'm a Tesla, it's all about Tesla, but I think all of our cars, I think in 10 years, when we go to the pumps, the majority of us are going to be going to these charge stations, and we're going to be charging up our cars. It's not going to be the same as it used to be. There'll still be some oil, still be some gas, but I think you're going to see a big movement in the next decade to electrification. It's cleaner, it's cheaper, at least, and I think that's why I'm just not a bull in oil at all, going long term.
Okay. Does the events of last night, does that kickstart Bitcoin here?
I have no comment on
No
Bitcoin.
comment? Okay.
I'm not a
Fine.
crypto trader.
Fine.
I've said before, and I've been a Bitcoin bear forever. But again, I think there is some, people say there's no value, it's a zero. I don't believe that. I believe there is some value here, but I don't think everybody's going to be trading. And I don't think when I look 20 years from now, everybody's going to be doing crypto transactions. First of all, it's not very efficient. We've seen that already. So I don't think it's, and it's not going to replace the whole financial system. The people who believe it's replacing the financial system, because crypto is not just transactions. Crypto or the financial system is not just transactions. Crypto is trying to solve that problem, but the financial system is everything else. You think about insurance, you think about how many different services the financial industry is in. So I don't think crypto's coming and banks are going away. And a point that you were making the other day, would they even, is the U.S., and the government's going to allow, Bitcoin to come in and take over everything in their own?
That wasn't me. That was Anne Marie. Yeah, that was Anne Marie.
So that was Anne Marie that was making that point. And it was a great point she was making. So I'm not a long-term believer in any of this crypto stuff. So
all right. Just wondering if a geopolitical event will kickstart
yeah,
it.
but it's helping it this morning.
Yeah.
It's not going to hurt. Something like this is not going to hurt it. It's
Right.
seen as an alternative here. So it's seen as some people as safety. I don't believe it's safe, but some people believe it's safe. And there's money coming into it this morning. So, but I'm just not. I have zero. So I said I have very little exposure to oil. I have zero exposure to crypto. I'm going to remain zero exposed to crypto going forward. Just not a believer. Sorry, Mark Yusko. I know you sell it pretty well and you get me thinking, but I'm just not a believer in crypto.
All right. So how would you approach today, Dennis? We've got basically everything that's up, like we talked about. It's basically either gold or oil. And there's like one or two other stocks that are up, but everything that's up is gold or oil.
I mean, everything is about relationships. And when you have big movement in the overall market like this, little independent news doesn't matter as much. Like you think about last night in AMD, what a rally the stock has had. I mean, the stock is in full parabolic mode here now. It's like feeling like upside capitulation, taking off another $3 here yesterday. I mean, I believe this was an all-time high for AMD, finally getting back to where it was in the year 2000. So 20 years later, it finally gets all those losses back. Unbelievable stock. Last night, they just had to buy it again. This thing last night, after close of 49.10, traded up to 49.75 again. And then this morning, obviously the overall market pulls the rug out from under it, and boom, it's down. So, or it's down here this morning. But again, I'd say $50. If I'm looking at AMD and you're an AMD trader, that's the next big hurdle for AMD. But the trend is your friend. The stock is significantly higher. Is it getting to a point where it's overdone? Absolutely. But we've seen stocks stay overdone for a long time and continue to rally. So I would just say 50 is going to be a big test for it. If it gets up there again, they're buying the dip in it already once again here this morning. I mean, this thing dipped significantly here. Again, I don't know if there's some bad ticks there at 4 a.m. open, but this thing looks like it trade under $45. I think. Am I looking at that right? Maybe I'm looking at it wrong. At the chart. I'm looking. Sorry, I'm looking at your chart wrong there. So
yeah.
But anyways, the trade down the 47 handle, so it's already a buck off the lows. So we've already got 2/3 of the losses back in AMD. I mean, it's the same tech stocks. And really, when you think about it, how much is Apple and AMD impacted by a war? These aren't like your stocks that are their earnings, that are going to be hurt here because we've got a potential war on the table. So I don't believe, that, tech is like, ground zero for getting hit here because of this news over in Iraq. So, and I think you're seeing money managers come in and put the money where their mouth is, and they're coming in and using this opportunity and the weakness in tech stocks here this morning to get long.
We just got some Tesla news, Dennis. They just came out with their Q4.
Oh yeah, it's auto sales today, right?
Delivery and production numbers. Well, I can never remember because GM doesn't do it anymore, right? On a quarterly, or is that a monthly basis?
Yeah. Ford, I believe, is today though.
Okay. Well, Tesla.
Ford on the schedule.
Tesla Q4 production almost 105,000, deliveries 112,000. I believe the estimate for their deliveries was at 103, so they beat that figure there.
Is that monthly or quarterly?
This is quarterly.
This is quarterly.
So record Q4 deliveries and production in the quarter for Tesla. The deliveries number was better than estimates. And there we go.
We are really bouncing around here. 435.31, the all-time high. That's your number, and then that's your line in the sand. We were down this morning again. If you show the chart, everything was getting hit here this morning. It has went green, Tesla, on these results. If it continues to ride, that's your first point of resistance. It's going to be the all-time high, which is 435.31. So keep an eye on that level.
Yep, and then they reported that Model S and X production 17.9 thousand cars, Model 3 production just under 87,000 cars last quarter. Seems like a good number, but I don't know how you interpret that on a day like today of all days. So you're right, we're really bouncing around here. But I would, yeah, look, we're back at yesterday's close, more or less.
This is this rally. This has, like Spitter's saying, we're 22 points off the lows here. I mean, we've gotten half the losses back already. It's 8:20 in the morning, and they've already used this. Like, every dip is just so hungry. The money managers are so hungry for any dip, and they get this 45-point sell-off overnight, and they're just licking their chops. Now it's only a 25-point sell-off. I mean, it's amazing how often these dips get bought. And again, the buy the dip, that has been the best strategy for the last decade. Continues. It's working here again this morning. Whether it continues to work, I don't know here today, but it's working so far.
So that tells you that, and actually, by the way, because it's the Friday after New Year's, I mean, is real money even in the market?
That's a good point you're making too.
Are people even back from their
No, I don't think so. Kramer's was tweeting out, and I don't know where he is, but it looks like someplace tropical, like Hawaii or something. But I mean, so he's still out. I mean, the big day with Joel Elconin, all the big money is still out here.
Bull's not here. The big money,
the little guys that are actually, there's no need to. We need to,
right.
We need these to trade every single day to pay our bills. So anyways, the big wigs are not here. They're coming back on Monday. So it's a good point. You're going to see real trading action, a lot more, of the big players coming in on Monday. So this is going to be an interesting weekend. What happens? Are people nervous? Do they want to be hedged over the weekend? Do they want to be long? Do they think the big money is going to come back with their buying shoes on Monday? All these questions to be answered. Are there going to be any, ramifications here? Are there going to be retaliations? There's so many questions to be answered. But again, there has been a lot of questions in this market for the last couple of years, and the market has always climbed that wall of worry.
Yeah, and the fact that this has happened so quickly, the first attack in this most recent chain of events was Saturday. The embassy was stormed, I believe, on Tuesday. So within a week here, we've escalated from 0 to 16. And that happens fast. That's not unusual, but it just kind of goes to show just how quick this can turn. Yesterday, everything was great, and we didn't even talk about this yesterday. But 1 year ago yesterday, Dennis, do you know what happened? Do you know what the big news of the day was 1 year ago?
Apple.
Yesterday? Yes, it was Apple. It was.
I know, because I didn't buy the stock that day, and I should have.
It was Apple coming out with a profit warning. Their first in what was it, like 8 years?
Yeah.
Something crazy like that.
Yeah.
And they lowered their Q1 sales guidance last January.
Yeah.
And look at that.
Think about that. The start of the year on day 2, we have Apple issues a profit warning, and it trades down to a low of 142, and that was the low for the entire year.
The year.
And then straight up for the entire year, and it has one of its best years ever, or at least in a long time. It's Apple doubled the year.
Not quite straight up, but close.
Yeah, well, we had a few pullbacks in there, but I mean, so there, right off the bat, you think, oh, it's going to be a rough year for Apple, starting the year like this. No, it was a great year for Apple. Yeah. So that was a buying opportunity. So money managers might be looking at that too, thinking, a little pullback here in the market on day 2 of trading. Maybe we got to use this opportunity to get long because it sure worked last year. Hard to fight this bullish sentiment. And it's still out there. I mean, it's showing you the fear is already, we had fear here overnight in the futures selling this around. Look where we've come back already. I mean, we're an hour before the open. We already got half the losses back. The market is just so resilient. That's what I'll just say. This is the most resilient market that we've had. But if you're looking and if you think we're coming back, think about what stocks were strong yesterday, because you're getting a significant dip in everything. So if you want to be long, buy the stocks that maybe were, the strongest yesterday. Think about Amazon. Amazon had a fabulous day yesterday. It was up, what, 80 points or something? It was up significantly at the close. How much was Amazon up yesterday? 60 points?
Yep. What was the open there?
I'm just trying to look. It closed the previous day, 18.4. It was up 50, at least 50 points. So big move. And you're getting it's down 25 points here still. Maybe that's the stock you want to own. Maybe it's an Amazon that you're using to buy the dip. Are you coming in here, if you're buying the laggards, like the retail stocks that were dipping yesterday, I mean, they're laggards for a reason. And it was very interesting. Like, we would have had an interesting show even without all this news over in the Middle East, because you saw a lot of rotation happening yesterday. You saw a classic rally to FANG, the Facebook, Amazon, not so much Netflix, but even Netflix and Google were up significantly yesterday. And you saw a rally or a sell-off in some of those stocks that had rallied in December, like your retailers. Your retailers had a horrible day yesterday. Kohl's, awful day. Macy's opened up, tanked all day. Nordstrom. And then you can just go into the other retailers as well. Retail had a really, really rough day yesterday. So if you're looking at dips this morning, I would not be buying the dips in the retailers. I would be buying the dips in the stocks that were strong yesterday, like your Amazons, like your Facebooks. Your Apple dip is already almost gone. It's only down $1 or $2 here now. So, I mean, that's what they're going to come into, I think.
What is going on? I just put out that GOOG chart, and is that what kind of a tick is that?
Oh, that's just that's from yesterday close. So that's when you see these ticks, FINRA, and you see the price like that. That's a cross from the previous day's close.
Okay.
So it's probably late to report. So FINRA is an off-exchange trade. That's an off-exchange trade. It could have been reported. It could have happened yesterday, a cross at the close, because it was at the closing price. That exact tick is the closing price. So it was probably some type of cross from the close, just getting reported to the tape now. So you got to ignore that. That's not really on the tape. 1353.80 is offered, so it's still down $14. Okay. But again, Google, great day yesterday. It was up like 25 points. So that's a kind of stock that they're probably going to come into again, if you think we're getting it all back. I still have not determined whether I think we're going to get all the losses back here today. So, I'm.
Well, you sound pretty bullish.
Not liquidating my portfolio either.
You sound pretty bullish to me.
Okay, so I've got to clarify. I don't know. I'm sitting on the fence here. Bullish, bearish, long-term bullish. Yes, long-term.
Right. Well, right. That's a given.
As a trader here, I'm completely hedged right now. I'm flat. I haven't decided if I, want to come in. But if I was, and if I wanted to add stocks to my long-term portfolio, I'd be adding the stocks that were strong yesterday. Because those are the ones that are having significant dips and maybe get an opportunity to get in. I've, like an Amazon, Facebook, like that whole Facebook, Netflix, Google. I mean, not so much Netflix because I've talked about that, but it had a good day yesterday too. Those are the kind of stocks the money managers will probably come into if the market is going to continue to rally.
Now, here's a question.
And the other thing is, what I want to say is the defensive stocks were very weak yesterday too. So not only retailers, we talked about this on the show yesterday, and I was saying like the Cokes and the Procter Gambles. I'm like, those kind of stocks are not the stocks that go up when you were ripping 30 handles higher on the S&P, and you're thinking you're going to this next big bull market. Those are not the stocks they're going to buy. So you get an opportunity here this morning, maybe like XLU, horrible day yesterday. Maybe it rallies a little bit. TLT showed some strength. Maybe get a little rally in some of the utility stocks. I think that rally is to be sold. So I would use this opportunity to maybe sell some of those, like the Procter Gamble, some of the consumer staples. Think about your XLP components and your XLU components. If they're getting a rally here today because we're all of a sudden worried and it's getting defensive, I think those stocks are the ones to be sold, in my opinion.
I just want to clarify real fast because we use the word defensive interchangeably a lot. Defensive, the word defensive in our context refers to defensive sectors, utilities, consumer staples. Defense stocks refers to like Lockheed Martin, Grumman, Raytheon, defense contract companies, right? Stocks, individual names that are in the business of war, essentially. So there's a slight difference in defense as we refer to it, defense versus defensive. Defensive meaning defensive sectors, staples, utilities. Defense meaning individual companies, Lockheed Martin, Raytheon, etc. Here's a question, Dennis. Does this kickstart? Is this the catalyst energy needs to kickstart in 2020?
No, I just went into this.
Fine.
I'm not a believer that this is going to be 2020 is going to be the year of oil.
But the XLE.
I mean, they've come back nicely. It's come back off the lows, fairly nicely. It's having a nice rally here too. But let's put this all in perspective. I mean, go long term. 2014, the XLE was $100. It's 61 now. So in the last 7 years, think about this. In the last 7 years, SPY has went from 170 up to like 325. So you could say we're up like 80% the last 6 years. So it's a significant rally. Actually, we're up more than that. So if I'm doing the math, just quick, we're almost doubled. Basically, in the last 6 years, we've almost doubled on the S&P. And that same time, the XLE is down 35%. The relative strength is still terrible here. I believe the reason for that is still the electrification of cars. I think we're moving away from oil. So I'm not a believer in oil. I think every rally you get in oil stocks is to be sold. That is my opinion. I'm going to stay bearish oil for a long time. It's going to take a lot of convincing to get me to believe that we're not going to be going full electric here eventually on most of our vehicles.
What are the balances saying right now?
They're sell. They're mostly sell. So we can
they are sell? Okay.
Yeah. Oh yeah. They're sells for sure. 233,000 is selling General Electric. GE, fabulous day yesterday. Wow. That really ripped it. And it got right up to these big psychological whole numbers. $12. That's the next big hurdle for GE. But that's a classic, okay, January effect when laggard stock. Maybe this is going to turn into a leader. So I'm not surprised that one shows some life in the last, in the first week or two. Still not a long-term believer in GE though, so you're not going to get me that bullish. But short-term, on a pullback here, probably not a bad trade. Gets through 12, starts to open up again. But this morning, like I said, 213,000 to sell. The banks have selling balances because the TLT is so strong. Mm-hmm. Bank of America, 109,000 to sell. Citigroup, 42,000 to sell. Morgan Stanley, 47,000 to sell. Wells Fargo, 79,000 to sell. Banks are showing some relative weakness here. Oil stocks are strong. We've talked about them all morning. ExxonMobil, 92,000 to buy. That's obviously showing strength there as well. The other ones are mostly to the sell side because we're still down substantially here. So it's not surprising that you're going to get mostly selling balances when the futures are still down 28 points.
All right, let's get to some other news such that it exists this morning because there is other stuff going on besides this macro war theme.
Okay, what do you got?
And you discussed retail briefly, Dennis. We do have one rating I want to hit this morning.
Sure.
Bank of America is upgrading L brands to buy. So obviously this will trade, like you said, this will trade with the rest of the market today, but an upgrade will help.
I will not fade this. I don't believe in the L brands long-term story. I like the dividend, 6.67%, but I don't believe that lingerie is coming back into favor as much as it used to be. Obviously, Victoria's Secret's being one of the biggest, revenue streams for L brands. That being said, this has a potential to squeeze them a bit. We saw what happened with Rite Aid, when that started getting squeezing. So I'm probably not going to trade it. I think longer term, L brands is still lower, but that could easily squeeze it to 19 or 20 bucks. So I'm not going to jump in here and short at 18 and then get the hell squeezed out of me. This is probably a no touch for me because I don't like the long-term thesis. I'm not on board with the Bank of America upgrade here. But that being said, I don't want to get squeezed either. So I'm going to stay away. Next.
And we do have some drug news this morning. Incyte, INCY, a drug that I'm not going to pronounce.
You're good at pronouncing these things, though.
Yeah, not today.
Give it a stab at it.
No, I'm gonna butcher it horribly.
You're good at it. I butcher it. I don't even get all the consonants and vowels right. At least you usually make it sound right.
I don't even know. Idacitinib. I don't know.
You did pretty good. Idacitinib.
Butchered that one. In any case, the trial did not meet the primary endpoint. Phase 3 study. That's the news this morning on Incyte.
Got the beats last night, still down. So this was one of the storied stocks from last night before, obviously, this the bombings here took all the headlines away from it. 72.25. That's a low. Actually, if I go 72 bucks, low from September, that's a level that it absolutely needs to hold. These things can be funny. Sometimes they sell them off a bit and then they buy them back anyways. I don't follow the stock fundamentally close enough to tell you anything more in the technicals, but I can tell you there's major support down there in the 72 handle because not only did we get down there in September, if you go to your monthlies, we got back down there in April last year too. So we basically have two lows right there in that same area. So I would say 72. Overnight, I believe we got down to the 73 handle, so we didn't quite get down there. If for whatever reason it continues to sell off, I'd expect a bounce in that 72 area.
All right, it is 8:35, so let's bring on our guest today, Chris Temple. He's the editor and publisher of the National Investor. He's good micro and macro. Chris, good morning and Happy New Year.
Happy New Year, fellas.
So when we booked you, we had no idea it was going to be such an interesting macro day. So how are you interpreting the events of last night and this morning, I guess?
Well, Spencer, when you have something like this happen, you need to see how this affects your core theses on the markets and on different asset classes. Does it make a story better? Does it give you pause? You have to step back and wait for the dust to clear, so to speak. Dennis, you made some great comments. I've been listening to you guys on energy. I'm one who has also been very standoffish with energy. I just added back energy products or enterprise products partners, EPD, to my income list because it had gone down about 15% from when I told people to sell it last summer. And I've frankly been looking at energy stocks a bit more as candidates perhaps to extend their late year bounce. But I'll tell you, if you like energy stocks as a theme, this is the very last reason you want to see oil go up, because this actually harms prospects for global growth. Because the only thing that is going to help energy is that we are going to see a global reflation, trade continue to build, less worry about trade and stuff like that. This doesn't do that any good. So on energy, at least I'm with you, Dennis. But everything else I've talked about recently, even before last night, I believed that the rise in long-term yields is over and that during 2020, we will work downward again in long-term yields. This actually strengthens that case. So that's one sector I can say that this news is meaningful in making what I already believed stronger.
What about gold?
Positioning yourself for, let's just, forget about the news here overnight here. Let's just look overall at your thoughts here entering 2020. I mean, yesterday we're ripping to new all-time highs. We get a little pullback overnight here on some worries about the war here. How are you positioning overall going into 2020 though?
I'm expecting in the very near term the market to give back a fair bit of what it made last year, especially late in the year. Noteworthy, and you guys spoke to this also yesterday, was the Russell 2000 was actually down at the same time the Dow and the S&P and NASDAQ were up. So this has been a rally of late that again has gotten top heavy in a smaller number of the big cap growth and momentum stocks. I think they're extremely vulnerable. I believe you're going to get a correction, nothing to do with what happened with Soleimani getting killed last night, that was what we were going to have. And then the question really going forward, guys, is are we going to have a great sag, as Ray Dalio calls it, a slow, dull ache, as I call it, where the economy bogs down more, the market has a harder time making any gains, but everything at least holds together? Or is there still some danger somewhere in the world of a financial or systemic issue? And I still think that there's a chance of that. So I've been getting heavier into value stocks. We're adding back to our yield plays. I love the gold space. We're heavier in that than we've been in several years, and that's going to increase further because under any scenario going forward, gold is going to do well. But generally speaking, I'm ambivalent to slightly bearish on the overall stock market for the foreseeable future.
So let's talk about those gold names. What gold names do you like?
Well, as far as the average person is concerned, where they don't want to have to research a lot of companies, the standby or the fallback positions, if you will, are GDX and GDXJ, the two major unleveraged ETFs that are in gold stocks. Both of them have recently met their highs from this past summer. Gold itself may bog down here a bit because we're running into what has been major overhead resistance around 1570 an ounce, give or take a little bit. So I wouldn't be chasing this too much now. But those are easy, no-brainer ways for people who are relatively unsophisticated about gold stocks to play it. Beyond that, as far as individual names, Spencer, you've got to ask yourself what is going to mean something business-wise to the sector going forward. If you're looking at exploration companies, who has the projects that are farther along than their peers that a BHP Billiton or a Newmont Mining or someone like that is going to want to buy, because one of the underlying stories in the gold sector is that grades are falling. You've got what some people term as peak gold, where there's not enough new mine development on tap to meet demand going forward. And so, there's a million different little junior companies out there that have got a story to tell, and most of them are garbage. And in the past, you've known that a move in the gold sector is getting long in the tooth when garbage companies go up with the rest. We're not there right now by any means. But I think the one on this continent that has got to be at the top of anybody's list is Seabridge Gold. It's SA on the New York Stock Exchange, SEA in Toronto. They have got one of the largest undeveloped gold and copper projects in the world, 40 million some odd ounces of gold and proven and probable reserves. I forget how many zillion pounds of copper, but a lot of it up in British Columbia. And as time has gone on, they have continued to build that resource, lower the initial expected costs. And because this thing has taken on a character as much as a copper play as well, and copper's long-term are very bullish. I don't like it right this very second. Long-term, it's very attractive. When you use copper as a byproduct credit, their current economic assessment of their KSM project is that their all-in sustaining costs for gold are around $300 an ounce. So this is going to be a Cadillac of a project going forward. Somebody is either going to JV or just buy them out, one or the other, one of these days here. But that stock at its current valuation is absurdly cheap based on its reserves that it has.
Let's move on to some other sectors here, Chris. I know you have some names in retail and biotech that you're eyeing. Tell us about those.
Well, biotech is one of my favorite areas because you've got some great human interest stories. You've got some ability for some huge gains. You just put up Sarepta. That's the gift that keeps on giving for our members. The very first time that I ever recommended that company, it was known as AVI Biopharma and based out in the Pacific Northwest. That was 21 years ago, believe it or not. And we traded in and out based on news. The stock, as biotechs always do, they're very news sensitive. They'll run up, they'll double or triple, you sell it, you wait for it to go back down. But then they hit the big time. We got back in 2012. The stock was under $2 a share. By the fall, it was 60 when they came out with their first big trial results on eteplirsen, which is now marketed under the name Exondys 51. They recently had their second Duchenne muscular dystrophy drug approved by the FDA after it was first shot down. In fact, we got out near mid-year, near that peak. The stock cratered because the FDA threw a monkey wrench into things. We got back in around 80 and we've ridden it back up since. So, and then last week, if you guys saw this, and I hope you talked about it, it was actually not last week, 2 days before Christmas, they announced the single biggest licensing deal in the history of biopharma with one of their gene therapy offerings, where Roche, the big Swiss biopharma company, made a big deal with Sarepta. So this, I wouldn't be putting new money in here now, because I think after the run that it's had, you're going to see some vulnerability to the downside. Maybe that second gap on the chart there, we could go down to $115 or so. Long term, though, this is a Cadillac. This is the leader in its space in RNA technology, and it's still got a very, very bright future ahead of it.
And what about in retail?
Well, retail, as a lot of people have pointed out, you've kind of had a tale of two cities, if you will, in the U.S. economy. Manufacturing stinks, and that's going to continue to a great extent, I think, whether this cockamamie phase 1 deal with China gets signed and approved by Congress or it doesn't. But there's still a lot of liquidity. Consumers are still in relatively better shape than they were at the peak in 2007. So there's a lot of retailers that I think are very compelling. I had the sense to tell people after watching it for quite a while to buy a company called Big Lots when it was near its low recently, under $20. Now the stock's up around 28. In my opinion, this should be a $45 or $50 stock. It's got still a 4% plus dividend yield. It's really a transition type of store. I don't want to take a lot of time on this, guys, but Big Lots is the kind of a dollar type store or discount store that you're not ashamed to go into, as you might be some others who will remain nameless. Let me put it that way. They're quality, nicely laid out stores. They've done a super job at using furniture and really nice discounts on furniture is a hook to get people in to buy groceries and things like that. So Big Lots is becoming in some ways a Target Junior. And I think it's really unappreciated. It's an unsung stock. It's already had a nice rally since we got in, but I think it's got much farther to go. I think their next quarterly report after the Christmas season are going to surprise some people. As far as grocers, my favorite grocer continues to be Ingles Markets. Nice family run North Carolina based operation. That thing's already up about 50% since I added it back, and I still like it going forward. Not only does it have better metrics and numbers than most publicly traded grocers, but they also have a big slug of real estate in the Southeast US, which is the hottest demographic area of the United States.
Question from our chat here, Chris. Do you have any thoughts on AbbVie?
AbbVie, it's interesting you bring that up because I recommended that when it was near its low. I still think it's got a long ways to go. For a while there, mid last year, the market was looking way too pessimistically at its buyout of Allergen. And they've realized now that AbbVie knew what it was doing. It's still a great company, still a very healthy dividend yield. So that's a name that I think can go up further. And in fact, if we see in 2020 what I'm expecting, and that is a broad stock market that's going to be hard pressed to get any gains, and it's going to be a market environment that forces people to actually be investors again, rather than just close their eyes and play the passive game. This is a stock that still, even after its run from last summer, is going to get some attention. Its fundamentals are still very compelling. One big name also that I liked, I recommended it, but we already sold it because you've got to pick and choose, is CVS. CVS is a good company. It's been a good rebound story, but that already met our price target. And so that's one, not a direct corollary to AbbVie, but CVS is one that I'd wait for pullback on before I'd buy it again.
And so what you just said is important. I think shouldn't be overlooked. You sold it because it hit your target and you're out.
Yeah.
And that's important, I think, to remember when talking about individual names like this.
I have enough trouble, Spencer, with the few cannabis stocks I've recommended that have all been destroyed. Not having sense enough sometimes know when to get the hell out. So at least on CVS I did.
Yeah.
What are your thoughts on cannabis stocks? I mean, they had a pretty good rally a couple days ago. They gave a lot of it back yesterday. What are your thoughts here going forward?
This is, I'm glad that I've only got a few companies, one of which has done pretty well actually of late, but a few other ones have just been a dog's breakfast. And I still have got a lot of faith in the industry. There's been a lot more growing pains than people thought. A lot of companies promised too much, ran into one kind of problem or another. This is an industry that's here to stay. I have no question about that. And I'm revisiting not only the few that I've recommended, but looking at some other possibilities. And more so, Dennis, in the corollary industries. Who are the companies out there that are going to help cannabis growers achieve better economies of scale and better competitive margins and whatnot against their peers? But, in an environment, and granted, we're talking about government, but when the province of Ontario can lose their rear end with the state-run industry up there, it doesn't speak well for the whole industry, at least yet. So there's a lot more growing pains than I think people anticipated. Cannabis stocks, sadly, even though I think there's more substance, were kind of like Bitcoin for a while. People just bought them based on excitement and greed and the greater fool theory, and a lot of people got burned.
A dog's breakfast. I like that.
A dog's regurgitated breakfast, maybe.
Oh, Chris, I almost forgot. Before I let you go, I want to hoping you can interpret this cartoon for us.
Oh, yeah. I sent you that late last night or whenever, Spencer. This is going to be the underlying story for the Federal Reserve this year. Jerome Powell told us in 2019 that he was cutting interest rates 3 times as insurance because we had the trade war, we had uncertainty and all that kind of stuff. And in case anybody out there in our audience missed this, he recently changed the reasons for those 3 rate cuts. Now that we ostensibly have the trade war, at least a truce, and this phase 1 thing, such as it is, we don't know the details yet. And, Brexit is now going to be a fait accompli, although that still is going to bog down, I think, this year. Why is he not raising interest rates again? We've got the stock market as of yesterday at all-time highs. The U.S. economy is still meandering reasonably well. But no, now the chairman of the Fed has told us that he needs to get inflation pushed up. But here's the problem, guys, and I wish we had time to talk about this in depth today. People have to understand inflation, not in 1970s terms, but in the terms that were first given us by the now late Paul Volcker when he did a 180 as far as how he ran the Fed along about 1982. And that is inflation first starts with asset prices. And the Fed hopes and policymakers hope that enough of that wealth effect trickles down to the real economy to help people service the ever-growing debts. So for people now looking at the Fed, for example, all this money that it threw at the repo market through the end of last year and saying, oh, gee, any minute now the predictions of the hyperinflationists who are saying that the dollar, we're going to be using wheelbarrows to carry our money around. We're going to see gold at 25,000 an ounce and all that kind of stuff. They kind of missed the boat. If you were looking for inflation, what about the S&P 500 from the bottom in 2009 going from 670 to 3,200 and change? What about the notion of value of derivative contracts back into the quadrillion of dollars globally, again, a new all-time high? The CLOs, the junk bonds, all the rest of it. If you were looking for inflation, we've had it for 10 or 11 years since the end of the financial crisis. And the Fed still is somehow to try and get us all servicing the ever-growing debt, trying to stoke more consumer price inflation, which for a variety of reasons ain't going to happen. It hasn't worked in Japan. It hasn't worked in Europe. It will not work here. The danger, as you see from that cartoon, is that as the Fed is trying to continue pushing on a string, generating more money creation and inflation, as they see it, the next reversal, such as we had in 2008, is what looms now. We don't know what's going to trigger it, but that is the next major move. Is not a big rise in inflation as we remembered it from the 70s. It's going to be another deflationary episode as all of these bubbles start to lose their air again.
All right, Chris Temple is the editor and publisher of The National Investor. He's on Twitter at @NatInvestor. Chris, as always, thanks for your time, and we'll talk to you again later in the year.
Take care, fellas.
Thanks, Chris.
All right. 8:52, Dennis, we do have an earnings report this morning, if you can believe it.
Really?
Yes, we do. Lamb Wesson, they make potatoes, right? You've seen them in the store probably. They reported Q2 EPS 95 cents. This is adjusted EPS, 95 cents versus an 84-cent estimate. Sales also beat at 1.1 billion versus 964 million. They also raised their adjusted EBITDA guidance this year. It's a good report for LW.
Stock is trading higher here, $87. You have all those pesky highs that is trading above. If you are bullish of stock, you do not want to see it get back down below 86.59, which is the high of the move. You want to see it hold on to that. I don't know if this is a stock I'm piling into, even though the report is good. Again, a little bit defensive.
I'm in food stock.
Yeah, it's kind of stock I'd actually probably be more inclined to sell. So it has hardly traded here this morning. I know it's a good report. Maybe it can give a little bit of life for a bit, and it's been an awesome trend. I just think it's long in the tooth, and it's not. I don't think this is the kind of stock that's going to lead us in the next big bull market charge. So I have a hard time getting on the bull train on this one.
I think that's a fair assessment. I don't think a potato company will lead the market.
Been an unbelievable performer though, really, since the summer. Stock went from 60 to 87. But if you're buying it now, you're buying somebody else's profits.
Yep. Speaking of unbelievable performers, or actually not anymore, but Wingstop, which has taken a haircut of late, is catching an upgrade this morning from Wedbush to outperform.
Whoa, crazy trading day for that yesterday. I'm not sure what happened off the open, but did this have news or something? Because it went from 86 to 81 in a matter of, I did not notice this, so I'm just seeing this now for the first time.
Mm-hmm.
And the first 15.
I didn't see anything. I didn't see anything.
I don't know if there was a catalyst or not. But anyways, that's an unbelievable. So it came all the way back. Now it gets the upgrade. I think you get people nervous probably around yesterday's high. 86.99. So that'd be the first stopping point on this upgrade. You get above that, you do have a level up at 88.59, and then you get into the 90 area. So you start to get a little bit thicker. It thickens up here. So there is room to 90, but again, that candle yesterday spooks me a bit.
And that's pretty much it for the ratings. Very quiet, as you'd expect, on a Friday. Other headlines I want to hit real quick. ACOR, Acor is up on news that Stephen A. Cohen's .72 has taken a passive stake in the company. It was a 9.8% stake in Accorda Therapeutics. That was from yesterday after the close. So you're seeing that's their catalyst for that this morning. And ILMN called off their deal. The ILMN PACB deal has been called off. And Illumina will pay Pacific Biosciences $98 million in a termination fee. So those are just
PACB not selling off on that. It sold off a bit last night, but got the losses right back. So I guess they're okay with that.
Yep, just two smaller movers this morning, headlines, I guess, within the midst of this overall, what is an overall very volatile morning. So Dennis, we're just about at the end of our show. How
Markets
have things
calmed down?
Yeah,
a little bit.
it seems to be that way. So how has the last hour or so?
We're just kind of hanging out. So we
changed up?
overshot overnight, being down 45 or 50 handles wherever we got down to there. We've overshot. Now we're kind of just in the middle of the range, really. So do we go down? Do we retest the lows, or do we continue at 9:30 to see the dippers come in? I would keep Apple on my screen, even if you're not an Apple trader. Keep it on your screen because it is a market leader here right now. If Apple can turn around and start to get more of the losses back, and yes, we have some positive commentary from some analysts here once again in Apple, but keep that stock on your screen because it can be an indicator for the overall market. And then obviously, you got to look, just at, other catalysts here too. The TLT is starting to weaken off a little bit from its highs, but overall, when I'm looking at imbalances here this morning, you're seeing it about right. And we're down 30 points. You're seeing everything with a pretty good sell imbalance. No standouts. What I will say is some of those defensive trades where you think, oh, well, maybe they'll buy the Procter & Gamble's of Coke. You're not really seeing that. You're seeing them actually down. Johnson & Johnson, which is sometimes seen as a defensive stock and sometimes can actually go up in a bad tape, it's trading down $1.18. And it's actually got 82,000 to sell. So there's a significant seller off the hop there too. Procter & Gamble, 31,000 to sell. Coke, 36,000 to sell. So you're not seeing that overall, whole XLP components holding up that well as sometimes you do see on these days. So I think the theme for me going forward is I look at what was happening yesterday before all this news hit the tape. And if I'm buying stocks, if I was going to buy stocks, I would probably be buying on the dips. I would probably be buying those ones that were leaders yesterday. I would not be buying the dips in stocks like Coke and Pepsi and Procter & Gamble because I think I still think this bull market is not done here yet. And I think these are stocks that are seen more as defensive, and they might show a little bit of life today. So that's why I'd almost be a seller of those rallies. XLU, same story. Ugly candle yesterday. Get some of those losses back today. I think you have sellers overhead. So I actually like XLU from the short side if it can rally here a little bit today.
Dennis, don't look now, but Tesla is holding
ripping
up
through to new all-time highs
it's
again.
Holding up, and I guess you could say it stopped at 440 for now.
It kissed 440, and now it's pulled back here. But again, this stock is just so resilient. Why fight the tape on this? Everybody wants to short this thing, thinking it's eventually going bankrupt. I'll tell you, it's a long ways away from anything like that happening here. The stock is just hot. It's still squeezing shorts. There's no reason to think that the story is over here. So I've said, on the show, I could see this. I could see this thing. I'm not in it, but I could see it $500 or $600. I could see that happening.
Whoa!
But big test for it here is
not this year. This year,
I could see this thing hitting $500. I could see it here $500 this quarter.
Yes, yeah.
I think it's unbelievable. So it's hard to fight the tape in this. There's still so many people that are bearish this thing. Those people all got to wash out. There's still a lot of people short. What's the short interest on this?
It just like I hear Tesla at 500. I can't even comprehend that because of
It's 436. It was
how
250.
I know. I
Just
just
think
haven't
it'd be a $500 stock.
in my head. Tesla's still at 280.
If you're shorting it here, I still think you're early. I'm not in it. I have no position in it, no options, nothing, because I can't stomach it. But if I was going to, I'd be a buyer pullbacks on Tesla if I had to make a position in it. The stock just continues to outperform. We'll see what it does. Again, 435 is going to be big. Let's see if it can open over that and hold that number. If I'm bullish, I want to see it hold over 435 here today. But this stock just gets bought.
All right, that'll be it for our show for the day and for the week. Thanks to our guest, Chris Temple. Thanks to everyone in our chat. Catch our podcast or rewatch our show on youtube.com/Benzinga TV. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Everyone, have a great rest of your day. We'll be back with you with Joel on Monday.